Hey guys, welcome to another episode of Stable Talks, powered by Bitso. I'm here with Julián. How's it going, man?
Thanks, Caio. Very happy to have you here, to have our amazing guest, and ready for another exciting talk.
That's it. For this episode, we have Amit, who now leads BVNK in the US. How's it going, Amit?
Oh, good, man. Thank you, Caio and Julian, for having me. Looking forward to it.
That's
Thank you for
good.
being
That's good.
here.
Yeah. We appreciate you being here with us. Stable Talks has been a while in the space for a while, actually, up to this point, like roughly like 3, 4 months. We have been talking to amazing people from the stablecoin and fintech industry. And it's always funny how there's always something new to talk about. So the space is booming. There's fast time possible to talk about stablecoins. So we actually met in the US, in New York, me and you, a while ago. And I remember that when we met, you was just starting at BVNK, and has been some time since we last spoke. So I'd love to hear your thoughts and what is actually happening. But before we go straight to the discussion, we'd love for you to give us like a general introduction about yourself, your background, and how you actually got into BVNK.
Yeah, sure thing. It has been a few months since we first met. There's been a lot going on, so excited to give you the update for you. Uh, so I have a pretty kind of varied background across TradFi, crypto, and now stablecoins. In school, I actually studied pre-med. I thought I was going to be a doctor, and then I disappointed my parents by going into the business world precisely as the financial world was crashing in 2008, 2009. So I started my career at PwC, kind of on the audit and consulting side. I very quickly realized I was a terrible employee inside of a big organization like that, where I like to move a little bit faster. But it was good in terms of learning how different businesses operate, what's important to them. Um, but it wasn't the right fit for me. So I was always a little bit of a investing Warren Buffett nerd, and I was lucky to be able to move on to a couple different hedge funds who were playing in that space. And that was really where I learned a ton about markets, etc. But during that time is when I discovered crypto, and I couldn't really stop thinking about it and talking about it. And everyone in the investment management world was extremely skeptical on it. It's a very different world now. People thought I was just like talking about funny money and fraud and criminality. But I just kind of had this view that things could be different. And I had been looking for opportunities in the crypto world for many years, but at the time, most of the talent need was engineering, technical kind of talent, not finance guys. So it was really just kind of keeping my ear to the ground. And finally, I got connected to BlockFi, which was building retail financial services in the space. And I joined there as employee number 8 to lead the finance team. And that was really sort of what put my career path in like the startup entrepreneurial startup world. And it was really cool to be in the hyper growth mode. We were one of the fastest growing startups at the time. In 2018, we did a couple $100,000 in revenue. 2021, 3 years later, we did almost $500 million in revenue. I was number 8 at the company. We eventually grew to almost 1,000 people. But for all the ups, we had like very public roller coaster ride down too. Um, BlockFi story had like a pretty difficult and traumatic ending for the relationship with FTX and where we were got caught up in their fraud. And it impacted 100,000 people. I still carry the scar tissue from that. Um, Losing majority of my net worth was one thing, but knowing how many other people were impacted was really difficult too. And it's still something I think about a lot. And because of that, I had mostly sworn off the idea of doing anything in crypto or digital assets ever again. Um, but the stablecoin opportunity is just so like interesting and impactful that I couldn't help but really be excited when the BVNK opportunity came around because people started talking about it in different ways. So Visa is in their annual report they talk about how they do $13 trillion in annual payments, but they think their TAM is over 200 trillion when you think about all the global cross-border payments, B2B, P2P, government payments, B2C. And if you think about how stablecoins could theoretically power a lot of that under there, it's really just like the beginning of a really interesting time and a new application for crypto. So for me, I've been really excited to join the BVNK team, lead the US business here because I think there's a ton to be working on.
That's amazing, and like that's also like not only a personal roller coaster as you mentioned, but also like the market. No, during this kind of last 10 years, the crypto environment changed a lot, and like still focus a lot on Bitcoin and like on Bitcoin's performance as like the leading edge of how crypto is performing. But this year, for sure, like stablecoin has been like one of the like hottest assets. No, like with the Genius Act as like the last event on the stablecoin world, but. But people start relying a lot on stablecoins also to daily lives. No, so what's the place like getting deep into the stablecoin topic? What's the place or what like a kind of role are stablecoins playing in an overall crypto world now?
Yeah, of course. So I think one of the most important and interesting and fascinating parts about the stablecoin application is how horizontally it can get applied across industries, geographies, people, businesses, use cases. And we really see that in the kind of like go-to-market we have where our customers tell us about like their underlying businesses and the problems they have. But despite all of the kind of different ways it could be applied across businesses, I think there's a few kind of core key use cases you guys are all familiar with, but it's worth worth recapping here. So one, as you guys know better than anyone in the world probably, is the ability to hold dollar access in places where it's hard to hold dollars. I think LATAM has just been so cool to watch on this because of how quickly they've adopted this naturally and organically. Even in my old role, we had a lot of contractors in Argentina that this is in 2020, 2021 that asked like, hey, can you stop paying us in banks? You're already paying us in dollars. Can you just send it to our stablecoin wallets? I thought that was like so cool that it emerged so organically like that. And now there's like things like employer of record types of workflows where globally there's people who are working for companies all over the place, and at home they can keep their currency, but maybe they lose 2% a month in inflation, and that's after in Argentina that's after it's come down from like 10%. Like it's really like amazing kind of opportunity there. And then there's speed. Everyone knows that for certain workflows, cross-border payments can be anywhere from a day to 5 days, depending if there's a weekend or a holiday in between, and the urgency of the banks in between them. There's the 24/7 availability, where you're not held up by bank hours. And then even now, they're starting to see some emerging use cases where, as the world and folks like Coinbase try and push the world on chain, there's more stuff that can get built in a programmatic and smart contract way. But nonetheless, where we have a world where fiat is the starting point, you still need folks that can help go in between, have the licensing and the security and the workflows to facilitate that. So we see use cases across all of these, and it's been really exciting to kind of like work through.
That's awesome, man. And going deeper on BVNK specifically, like you mentioned, you joined not that long ago, but for sure you guys have met each other for a while from the space. So BVNK has been recently being one of the leading cross-border payments, stablecoin-based payments companies in the space. Actually, you guys have been doing like great partnership with WorldPay and others, the local, I think, maybe if I'm not wrong, and other big enterprises. So I'd love to hear your thoughts on what exactly has been BVNK focusing on. Actually, your hire is a signal to the market that, of course, the US is one of the core markets that you guys want to focus on. I also saw a post of your LinkedIn sharing like how fast you guys are growing in the US. So I'd like to hear your thoughts on the recent months since we last spoke, actually.
Yeah, sure thing. So maybe just for background for the listeners, like high level, BVNK is just trying to help turn stablecoins into a useful payment rail, I guess, for businesses and enterprises. That could take a few different forms. That could be helping a business send funds out, whether it's to settle an obligation, treasury use cases. It could be in reverse, where we want to help folks receive money for either receiving funds from customers or, again, settling some B2B type payments. We can support the conversion across fiat and into stablecoins. And then we can deliver these directly to a partner and their customer for their own use cases, or we can embed this into a partner's kind of platform so that their end users could actually touch crypto too. So it's a highly regulated business working for, with large enterprises, supporting real volumes. And on the regulatory side, we have like a very robust regulatory infrastructure with licensing across Europe and the US. And that kind of touches your point here. A lot of time where I've been spending in the US has been on the like 50 state coverage, which is through a combination of the MTL licenses we're pursuing ourselves, but then also given how fast the market's moving, we also want to make sure we have 50 state coverage, particularly for these enterprises that are here and want to have access to the US market. We're working with our friends at Paxos, your friends at Paxos. No Chuck Well, getting to know him better through the integration, and now we're gonna have 50 state coverage there. So all of these things kind of like come together through, after a long sales cycle, but eventually you start to get the volume. We talk to the teams, you get them comfortable with who we are, our licensing, then we can get the integration, then we start to see flow. So when I first started earlier this year, we were just doing like, tens of millions of dollars of volume in the US. But as we're starting to gain traction, both as we sign new customers and existing customers kind of scale up, it really starts to compound really quickly. And, we crossed over $400 million in volume processed in July. Should exceed that this month. I was hoping to be closer to 500 million. We'll see how we still got 11 days left in the month. We'll see how it goes, but it's a really exciting time. It's something where we can talk about like all the different use cases, but it's really just early days, which is what really makes it so much more crazy to think about where we can go.
What's interesting for us is that you mentioned the LATAM case, no, and you mentioned my country in Argentina, as in other Latin American countries. Like people start using stablecoin as a way of survival, no, like they want to hedge on inflation, devaluation of local currency, which is not the case on many of the countries or the regions like the EU or the US. So, and you mentioned that like for sure, stablecoin have some advantages compared to like Swift in like ease of sending, like price, cost, time. But what's the edge on the US and on Europe particularly? You think that can make the adoption grow, as is in the case of Latin America?
Yeah, sure. It's a really good question. So, even in Europe, holding dollars isn't as easy as obviously it is in the US. Of course, it's not as much of a problem as we see in LATAM or in Argentina, but getting dollar access and moving it around still has complications. But you're right that the core use case might be some of these other things. So, as an example, WorldPay, one of our clients that we recently announced our partnership with, they're one of the world's largest payments processors. I think it's something like $2 trillion annually in volume. 100 countries, that many currencies probably that they support activity in. So it just makes a ton of sense for them as they think about the diversity of rails and currencies on the platform to also include stablecoins as an option for their merchants. So we're embedding stablecoin functionality first for payouts onto the platform. So any WorldPay merchant that wants to process payments instantly and globally. So not necessarily just because they need dollar access, but there's a speed and global footprint advantage to getting this through stablecoin. We can support that for them without them having to worry about the complexity of crypto, private keys, security, changing their regulatory licenses to handle crypto, talking to their banks about whether or not they're touching crypto, which can have different consequences for them. And then, another one that's like, scaling up, and I'm really interested to see how it evolves is a deal we do with a platform called like High Note. High Note has a kind of broad platform, but they can also support card programs. Card programs are very unique in terms of how they're funded with the credit relationships with banks. Funding those programs consumes capital. It consumes a lot more capital if you're constrained by banking hours, bank holidays, weekends. And many folks are forced to pre-fund these facilities with the banks. And even in the US, when there is good access to banking connectivity, simply having rails that aren't 24/7 can create challenging, particularly if there's a cross-border component to it. So if there's card issued globally, but then the bank is in the U.S. and there's funding that needs to happen, that can be pretty cost prohibitive from a capital perspective. So that forces pre-funding, which can get freed up by funding in demand on stablecoins. But the bank doesn't want stablecoins; they want fiat. So that's where we can sit in between. Give us the stablecoins. We have connectivity into the banks that we can fund real time, and that's an area where before I joined BVNK, I wasn't really on my radar, but I think is going to be an emerging type of use case. And then we also have Flywire as a payment network. They have vertical specialization in the travel space, education, healthcare, and we're working with them on including stablecoins as like another payment rail for payment acceptance. So there's like simple use cases like that, and then there's the sort of more unique ones that evolve. And actually, I think just this week we're doing one of our first transactions where the kind of proceeds are going to be used programmatically on chain for a smart contract. So hopefully there'll be more to share publicly on that too. But I think it's really running the gamut of opportunity.
Oh, that's very interesting, man. And like before going deeper on the US market, like BVNK before, this whole movement with you and all those things that have been, happening in the US, you guys were very strong in Europe, right? With tons of licenses there. I think you guys have an EMI and other
Two
licenses.
EMIs.
Two EMIs, yeah, and other licenses in Europe.
Yeah.
And if you could give us like a parallel of what are the differences of these two markets? Because Europe, of course, has MiCA, the regulation there is more strict and all those things. Like, how exactly you guys have been dealing with the regulation there? I know that you guys have been growing there too a lot. So, a lot of you, if you could give your 2 cents on the differences of these two environments.
Yeah, sure. So, it's hard to say it any other way that it's tough. The European market is heavily regulated, but in ways that are a little different in the US is that very often regulation could be kind of like in spirit. Like there's a in the US there's very much sometimes there's rules that are prescribed, but especially when it comes to compliance, there's a lot of we may not say this is the rule, but this is the expectation. In Europe, they have both. They have a lot of rules that are very clear and prescriptive, and then they have the expectation on top of it. So we have a really like talented and strong team with like a ton of experience managing this in Europe and managing the relationships with the regulators. Where it gets challenging is on the customer side, where they want access to a European rail or some of our European relationships that are implicated by our regulatory regime in Europe, and then maybe you have to, depending on where they are, may have to step up their onboarding regime or the compliance oversight as a result of that. And when we enter into the U.S. and you have folks who are used to kind of like the more U.S.-centric compliance regime or onboarding requirements, and they get have to go through Europe. Bitso has Bitso's familiar with this too. It's there's a challenge there, but we hope to make that as like painless over time, optimize it over time. I think there's a part of it that becomes education, both internally for us and with the regulators as they get comfortable with us. The trajectory should make things smoother over time, but it is a challenge in the near term. And hopefully it's just a one-time thing.
No, and that's interesting, right? Yeah, as you said, like we are seeing now that not only in Europe but like all the Latin American countries are following suit of what the US has been doing. Like we have a new regulation in Argentina, in Brazil, the central bank has issued like dozens of public consultation regarding the stablecoins and other kind of like crypto-related stuff. We are seeing similar stuff in Colombia, Mexico, any country you name it. So like for sure the environment will change. And in your view, or like what are your view on how this will relate as well on a partnership you have been doing at BVNK, which is like the partnership between these kind of two different worlds, no? Like the crypto world for on the one side, and as you mentioned, the fiat world, no? You are kind of a bridge between like the needs that people have on any of these two worlds, that we are seeing are now more interconnected than ever. So how the adoption will grow or not grow related to this kind of new partnership between what used to be two separate worlds.
Yeah. I think there's a lot of different ways to think about it. I think a lot of folks in the space, ourselves included, think that there's a real possibility that in the longer term, that a lot of flow and activity and payments and store of value actually just lives on chain. Historically, the crypto world thought that was going to be the case with like Bitcoin, Ether, and all the rest, but it turns out that no one wants to deal with that volatility every day. Um, and then there's also tax consequences, right? Like no one wants to spend a Bitcoin, forgetting the fact that everyone wants to like hodl Bitcoin. Spending it and having a tax thing to fill out just because you bought some coffee just doesn't work and it's not practical. Stablecoin kind of re-envisions that. And if you get the world where you have all the connectivity and blockchain access, but also the stability of the dollar, there is a credible argument to make that a lot of activity in the new world just lives on chain. And that's not just payments. That could be store of value. That could be folks investing it. They could be spending off of a card there. It could be earning yield on it. We have all these sort of primitives in place today, but there isn't really like a full ecosystem around it yet. But in order to get there, I don't think you make like a wholesale jump from pure fiat to pure stablecoin. There's got to be a lot of like clean, regulated, compliant, comfortable ways for folks to go in and out of that world. So I think like bridging that is something we do well, and I think the key there is trying to abstract as much as possible of the complexity, to not make it feel like a whole net new experience, other than for the benefits. You want to feel the speed. You want the customer to feel like how much cheaper it is, how much easier it is to use, but you also don't want to like slam them over the head with like, hey, here's your wallet. If you lose it, like you're done. So we can manage that. But then if we go into that world, and it becomes a lot more comfortable for folks to be going in and out of fiat and stablecoin, and then I think that's a good launching pad for a world where funds just stay in stablecoin denominated wallets or on chain for a lot longer. I don't know if that answered your question, Julian, but that's sort of how I think about it.
So, yeah, for sure. And if Caio, if you permit me, as a follow-up, you have mentioned that how important it is for the US and for Europe as well, the possibility of holding dollars, and for Latin Americans. No, so one of the biggest use case we have been seeing is the need of holding dollars for business purposes, for personal purposes, but at the same time, we are seeing that non-USD denominated stablecoins are being launched. Like we have MXNB in Mexico, we had one in Brazil. There's a lot of CBDCs in different countries. What are your feelings about the future or the possibility of non-USD stablecoins in this world?
It's a really interesting question. I have a couple I have two completely oppositional thoughts on this. One is that it seems really natural for coins to re-platform in every currency for the local currency. Like, who doesn't want stuff faster, cheaper, available instantly at any size? Like, why wouldn't you want that? But then you have the market signal so far, which is it's not clear that the end customer has adopted any of these other ones so far. So I was just looking at it this morning actually, and Circle, who issues the USDC, as you know, it's something almost like $70 billion of market cap today. Plus add on, whatever it is, 100-something billion for Tether. Circle Euro, which has the same credible issuer behind it, and it has all the benefits of blockchain, is like 200 million euro outstanding. So I don't know if it's a chicken and the egg thing where like there's not enough applicability and there's not enough use cases for end users to care, or if it is there and end users just aren't worried about it because in Euro internally there's like plenty of connectivity with SEPA. There's instant payments. There's good quality products that allow that kind of transfer, and then in LATAM, in certain instances, they're even better in certain things. Like Pix is really cool. There's like folks in Africa and have really interesting product. And Pesa's old. Like that thing's been around forever. I don't have a good answer for that. I still think that it makes sense to have it on chain and have the option, but we can't ignore the market signal so far, which is sort of that the dollar has been kind of like the key beneficiary of the stablecoin demand.
Yeah, just following up on this topic. So I totally agree with this discussion. One of the main use cases that we have been seeing regarding local stablecoins, specifically in Brazil, right? Because like you mentioned, we don't actually need stablecoins to pay locally. So the majority of the volume that goes to and from the Brazilian stablecoins are just to switch to a dollar stablecoin. So the Brazilian stablecoin is not necessarily being used or being required in that specific transaction. But we have been seeing some very interesting use cases, like just to give you like one example, in Brazil, it's not that easy for you as a non-resident to have a Brazilian bank account, right? So if you are an American person or American entity, and for some reason you need to have or want to have balances in BRL, it's a pain in the ass for you to have it. If you have it like a BRL stablecoin, you only need the wallet, so you can hold reais and very simpler. So this is one use case that we have been seeing here in the region. Not that much of adoption yet, but I think that we might see something here going forward with this. On the non-USD stablecoins topic, actually not necessarily on non-USD stablecoins, but in the stablecoin issuance topic, of course, the Genius Act now is there, regulating stablecoin issuers. There are rumors that maybe some of the huge wholesalers and other not necessarily financial companies wanting to issue their own stablecoins. We don't know what is fake news or what is real, but I would love to hear your thoughts on this too. So you think that we might see even more stablecoins in the space? And what are the challenges if you see this? We most likely have liquidity problems. Of course, some of these stablecoins will exist maybe for internal usage, but I think we might see a very fragmented stablecoin space going forward.
Yeah, that's a good point. I think, well, I think it is already fragmented. There are a ton of issuers out there. It's just that there's like a pretty serious winner take most dynamic on the float side of USD stablecoins as it is today. And I think it kind of breaks down in two kind of key modes. One, like Tether is like has an extreme first to market advantage that has been not only robust but also persistent through like a lot of negativity against Tether for a long time. Like how many times was Tether alleged to be like a Ponzi scheme that's going to collapse? And now it's like kind of undisputed the most profitable company per person that's ever existed. That's like an interesting thing. And Tether is doing that without playing the yield reward sharing game that every other issuer is kind of trying to introduce the market with to get it. Because how else do you get adoption unless you make it interesting? Tether, to my knowledge, hasn't been doing a lot of that. But if they decided to, guess what? They have the biggest balance sheet, and they can still they can still kind of like sway the market a lot if they chose to. Circle and USDC has the second to market advantage plus like this tremendous distribution through Coinbase. Those are two pretty hard things to go against if you're issuing a new stablecoin. There may be other ways for that to evolve, but as a business, BVNK, we're pretty agnostic. We'll support whatever coin that the underlying customer wants. And there's fragmentation can be good if that means like our services are more valuable because we're the only ones that can handle a lot more of this like complexity. But then as you touched on, it could change the liquidity dynamics too, which is harder for an end user to manage, but again, is something that is effectively our job and what a business would pay us for. I think historically there was a threat that banks would issue a coin and then use their regulatory kind of power to crowd out the existing stablecoins, but I think Genius is really kind of like cemented in this concept of a regulated payment stablecoin that would make them more resilient. I think bank issued stablecoins could be interesting, but if they get caught up on fears around doing it on an actual blockchain, like if they're like, oh, we can't issue this coin on Ethereum or Solana because someone else on Ethereum or Solana is doing something that we're not comfortable with, then I think the adoption is going to be a lot harder. And if it's just a private blockchain, why do you even need a blockchain? Just use a ledger. So that's my sort of like cynical take on that.
Yeah, and is there a place now for CBDCs? Because like we have been seeing like all kinds of experiences now from like Drex in Brazil, like too many central banks going from like, hey, stablecoins are kind of a nerdy stuff slash a Ponzi scheme, moving forward to, hey, we have to compete with this guy. Let's build our own CBDCs. Moving to, hey, let's issue the Genius Act to allow private issuers to get their own stablecoins, and let's use those coins. So, what's the role CBDCs, if any, will play in this scenario?
Just to add on this, and I'll pass it back to you, Amit. I don't know if you guys heard the news recently in Brazil, but we recently had a big event happening here in Brazil called Blockchain Rio, which is now one of the biggest, if not the biggest, now digital assets event here in Brazil. And the president of the central bank announced in the middle of the event that Drex would not use blockchain now.
I didn't know that. Yeah.
So they quit with no blockchain.
No blockchain, and they quit. Like spent like 3 years with all of the big banks. Now with 80 people in the digital assets team working on tokenization, and now, okay, maybe blockchain is not the right.
Maybe we have a new category, which is the central bank non-digital currency.
Yeah, otherwise known as cash. Yeah, so I think that's like the challenge that CBDCs are going to have if they want to use a market-based mechanism for adoption. If they're going to wield the stick and say, "Oh, this is illegal. This is the only option," that's kind of different. But that's hard for us in the space to plan around. I think every signal I've seen is that the CBDCs need and want a lot of control. And I think that ultimately takes them away from public blockchains and, puts them towards a permission blockchain. I think that can still work when you think through the relationships they have with their banks, and maybe banks and interbank settlement could be really enhanced with this. But at the end user level, I'm a little skeptical on like how it would be rolled out. I also think governments and central banks, when they talk about this stuff, sometimes they underestimate their own control over it anyway. Like today, if you see a transaction you don't like, first of all, blockchain is incredibly transparent. The monitoring tools are extremely sophisticated. And they know this because they're like finding and arresting people from crimes that happened like 10 years ago that they've like sussed out now. So it's like they already have a very powerful tool at their toolkit, and then by bringing in regulated issuers through things like Genius, you've effectively brought them under your control anyway. Like, the U.S. regulator can clearly tell Circle to like stop, cancel, nullify funds on chain that they want them to. So I guess I'm sort of. I haven't heard as much on the CBDC topic generally, but I wonder if the fact that they're bringing them in-house a little bit gives them a little comfort that they can still exercise control. I mean, a blockchain on USDC or USDC on chain is clearly much easier for a regulator to manage, get a control of, understand how it's working, where funds are flowing than cash. It's like a huge advantage to the regulator than cash. So maybe
USDC for cross-border. Specifically for cross-border.
Exactly.
Because I have been talking to some banks here recently, specifically because in Brazil, in the last two months, we had a small situation regarding taxes in Brazil, where the IOF, which is the FX tax in Brazil, went from 0.38% to 3.5% out of a sudden.
Oh,
So
wow.
as you can imagine, yeah, the whole industry was like, okay, maybe stablecoins can help with this. And one of the things that we have been discussing with these banks, they always start a conversation talking about how can I make sure that this money is not going to, terrorism or all those things.
Yeah.
And I always answer the same way. I was like, do you know if the money now is going to terrorism? Can you see
Yeah.
the bank account? And you look at right now the balance of the bank account that the money was delivered to, and they was like, no, but in the blockchain, how will I know? And I was like, okay, let me show you. And I would just, for example, open the chain analysis panel. I was like, okay, you see this wallet? I can see everything that this wallet did before and after. And they always be surprised in all those things that we can fight this objective of maybe stable coins and crypto are easier to launch money and all those things. So yeah, I totally agree with your point. I think that these can be weapons for the governments to actually be better in this type of controls and to arrest people and all those things. Tether, for example, has been doing a great job in Brazil being close to the regulators. If I'm not wrong, Tether even has like an internal investigation team helping governments and policymakers and all of those topics. So yeah, I think overall, my personal opinion is maybe CBDCs will not happen as people thought that it would, and stablecoins will take this role, and maybe CBDCs, if they will continue existing, they will take a different path. Like in Brazil, for example, like I mentioned to you, the CBDC will be used mostly for RWAs and all those things, but not necessarily using blockchain at least up to this point.
I think that's right, and to your point, it's you remember like in the like U.S. war in Iraq and all that stuff, they raided these palaces, and that palaces are just filled with like suitcases full of U.S. dollars. Like stablecoins clearly an advantage to that. And then all everything when like when you talk about cartels, they show these pictures and it's like the walls were filled with cash, all of this stuff. It's like, well, like I don't know, stablecoin gets this sort of crypto gets this rap of, oh man, you can use it for this illicit things. It's like, I don't know, you can stop it a lot easier than cash because this stuff is everywhere. I think I don't know if you guys know, here in the States there's like this, I don't know how true it is, but there's this thing that like one out of every 3 paper bills has like small traces of cocaine on it or something like that. I don't remember the exact number, but it's like some crazy number because there's so much circulation and like there's so the drug trade uses cash so much that there's some stat there's like trace amounts of drugs on nearly every bill in circulation. So I think there's just like an education component. I think regulators will actually come to appreciate the power they can exert and the control and transparency they get through blockchain.
Yeah, and it's something we're having seen here in South America as well. And fortunately, the regulators went from stances in which, hey, they say, hey, like crypto is non-secure, like blockchain is like uncontrollable, like channel to channel money, and they have no like at least the basic knowledge of how you can work with the tools that already exist to kind of trace different stuff. But yeah, hey, like moving forward and like what we are or where we are now to what we see for the future. I wonder what if any like or what's the main ones challenges that stablecoins still have to foster real and huge and massive adoption worldwide. Is it like a matter of like just people knowing what a stablecoin is? It's a matter of regulation. We still need like partnership with financial TradFi stuff. So how do you see like this kind of like path forward here?
Yeah. I think there's a couple layers to it. One is what you said, like knowledge gaps in education. I think folks are starting to and this is at the enterprise level, government level, they're trying to understand the kind of capabilities and beauty of blockchain, but they really don't want to be associated with like crypto and the connotations that have come before it in terms of bad actors, illicit activity, theft, and these perceptions that are starting, and speculation, like meme coins, all this stuff. It's like it happens all on the same chain, so it has like a little bit of reputational damage to overcome. But at a core level, people want faster, cheaper, instant on rails. And then there's the regulatory and compliance side, and that's both regulators and licenses who need to get comfortable with the activity, feel like they understand what's going on, feel like that the partners in the private markets are acting in good faith and sharing data and helping them get up to speed with them. But then it also flows down to bank relationships. So banks are like kind of downstream of that because they want to make sure their customers are regulated. They want to make sure their regulators are happy, and they sort of sit in between that. And it's still I still think it's still a very fragile relationship in the crypto world with banks. They're starting to get more comfortable. Genius, I think, is going to be a really big, or already has been, a driver and change of posture in the U.S. And I think that'll start to happen. But you have to earn the trust. That's just reality. Like, for all of us as operators, we have to earn that trust. But I think it gets paid back in being able to build a business that like can scale, because there are folks who think you can build it non-compliantly, but you can't scale it to size that way. It's just too hard and like not possible to build a really big business by antagonizing the regulators. And then sort of more practical and commercial, there's two ways to approach like end user demand. There's like the business segment where we are, and then there's like the end user kind of like consumer segment, kind of like asking to transact in this over time. So we play in the B2B space and enterprise space, and there's a combination of all of the above. So there's like a longer sales cycle. There's education on like the technology. There's education on the company itself. There's getting their banks comfortable, getting them comfortable with our licensing. And then there's the fact that even if you're in contact with like pretty senior folks at the organization, like the whole organization really has like a say in it. You really have to sell the whole team, not just like a single person. Like legal and compliance need to know all the aspects of the relationship. Are the docs buttoned up? Is this thing right? Is this disclosure right? Is the compliance licensing going to fit here? Do the banks get comfortable? Ops need to know about the work streams and uptime and security and like the wallet infrastructure. Finance needs reporting. How are they going to report on their books? How is it going to plug into the ERP? Treasury guys, like what's the availability? Is the funds going to be segregated? Or what kind of controls do I have here? So we have to work really cross-functionally. I wish it went faster, but the longer term, I think these conversations drive the product, because ultimately what we want to do is make it clear, make it transparent, make it abstract, so that it's just easy to plug into and use. But it's not easy. We don't always get it right. There is friction. But hopefully, if we do it right, we'll drive the capabilities and drive the kind of like product experience that can get scalable. And coming back to like the LinkedIn post you mentioned, Caio, it starts slow, and then bumps, and maybe it comes in fits and spurts, but it's slow and then fast. So we just have to keep plugging away.
It's the classic slowly then all at once.
Exactly.
Yeah. It was amazing to have this conversation with you. I'm sure that we could keep here discussing more topics here, going to the closing marks. And Amit, just to close here, man, like we had an amazing conversation. We discussed a lot of great topics. I think that most likely in the next month we'll see even more evolution in the space, especially since the US regulatory environment is now inspiring other environments like Brazil, for example. We had like a public consultation on regulation at the start of the year, and now we expect to have the final regulation by October at least. So overall, I think Brazil specifically will also be a benchmark for LATAM-based countries. So I think this would be like a snowball of the impact of how the US and of course players like you guys and Bitso and we here in Brazil have been doing business in this space. So yeah, man, just want to thank you again. And also, if you want to share some, social media links or a website where people can find you and BVNK will be amazing.
I'm pretty lame on social presence. I just have like a LinkedIn, but I'm easily accessible by email. Amit Cheela at bvnk.com. Happy to speak to folks that are interested and excited about all the opportunities to work together, both Bitso and Lumx, and appreciate you guys having me.
Thanks, Amit. It was really interesting, and like for us, having apart from us, Caio and me, who live in Latin America, having the perspective on the US and Europe, it's amazing to see how we are interconnecting different regions with a marvelous tool as Stablecoin. So, thank you very much for being with us.
Thank you. Talk soon.
Thanks, man.
See you.
Yeah. Bye bye.